Welcome to the deep dive. Today, we're taking you inside a really vital part of the global economy. It often flies under the radar, but believe me, it shapes so much like the brands you see on shelves, even the jobs in your town.
That's exactly right. We're focusing on the global mergers and acquisitions advisory market,
Yeah.
M&A.
Right, M&A.
It's basically the market for that high-level financial advice companies need when they're thinking about buying another company, selling off a part of theirs, or merging together. It's where the big strategic plays happen.
Yeah, the big chess moves of the corporate world. And we've got some solid grounding for this. Our insights are coming from a pretty detailed report by Cognitive Market Research. It's called Global M&A Advisory Market, a 2025 Outlook. So our mission today, we want to unpack the key trends, find those, surprising growth spots, and really figure out what this all means for business, for the global economy, and why it should matter to you. Not just the numbers, but the story behind them.
Okay, so let's start big picture. Globally, this market was already worth nearly $26 billion back in 2021.
26 billion.
Okay. And it's not standing still. The forecast shows it hitting over $28.5 billion by 2025.
Uh-huh.
And looking further out to 2033, we're talking almost $35 billion.
Wow. So that's a compound annual growth rate, a CG of about 2.5%. Now, 2.5% might sound, well, steady rather than spectacular.
Yeah, maybe at first glance.
But in a market this huge, that signals really consistent ongoing demand, right? So why this constant need for M&A advice decade after decade? What's driving that persistence?
Well, it's interesting because it's not just about growth for growth's sake. It's really woven into how businesses operate fundamentally. Think about corporate restructuring.
Okay.
Companies optimizing their assets, trying to get more efficient, and of course, global consolidation, looking for strategic partners or targets across borders.
So it's like ongoing maintenance and expansion.
Yeah, exactly. Kind of like a perpetual spring clean combined with strategic expansion plans. Businesses are always evolving, always looking for an edge or a wider reach. And these M&A advisors, they provide that critical expertise to navigate these, frankly, incredibly complex deals.
Got it. So it's complex strategy, not just simple growth. That makes sense. Okay, let's break this down regionally. Where's the action concentrated? North America seems like the place to start. The report says it's the biggest chunk.
It is, yeah, the largest regional contributor, projected to grow to over $14 billion by 2033.
14 billion, okay.
And, no surprise, the United States is the dominant force within that. Huge market share.
Right, you'd expect that, but is that the whole story for North America?
Well, this is where it gets interesting when you dig a bit deeper.
Yeah.
The U.S. market is massive, yes. But look at the growth rate. The report actually highlights stronger percentage growth in Canada and Mexico.
Oh, really? Faster growth?
Yeah, Canada is showing a 3.2% CAGR, and Mexico is even slightly higher at 3.3%.
Huh. So even though the U.S. market is way bigger in total dollars...
Exactly. The pace of growth is quicker in Canada and Mexico. It suggests there are some specific, maybe accelerating economic things happening there. Could be tech in Canada, maybe nearshoring boosting Mexico. It definitely points to dynamic shifts.
That's a great point, looking beyond the headline size to the rate of change. Okay, let's hop across the pond. Europe. How does the M&A advisory scene look there?
Europe's a substantial market too, of course. Projected to hit over $8.6 billion by 2033. You've got the big players, the UK, Germany, showing solid, steady growth. Germany at 2.6%, UK 2.8%, France a bit lower, 1.7%.
Okay, standard players. Anything surprising in the European data?
There is, actually. Similar to the Americas point, if you look beyond the big names, there's this category called Rest of Europe.
Right, so smaller economies.
Yeah, countries outside those main hubs. And that segment, it shows a much higher CIRR, 4.6%.
Wow, 4.6%? That's quite a jump compared to the bigger European economies.
It really is.
Yeah.
It suggests that while the established markets are mature, there are these dynamic pockets of M&A activity maybe linked to specific industries or digital transformation happening in some of the less traditionally dominant European countries.
Fascinating, finding those hidden growth stories. Okay, let's keep moving east. Asia Pacific, always seen as a growth engine. Does the M&A advisory market reflect that?
It absolutely does. A very healthy overall CGR of 3% for the region, projected to grow from about $5.2 billion to nearly $7.5 billion by 2033.
And China, I assume, leads the way there in terms of size.
Yes, China has the largest market share, growing at a solid 3.2% CAGR. expected to reach around $2.7 billion.
Makes sense. But is there another layer to the story in Asia Pacific like we saw in Europe and North America?
Definitely. The report really flags India and Taiwan as key areas of acceleration. India's got a 3.8% CAGR called out as a rising player,
3.8%. Okay, that's strong.
and Taiwan is even more robust, clocking in at 4.5% CAGR.
4.5%.
Yeah. So beyond China's sheer scale, you've got countries like India and Taiwan showing really significant dynamism. They're becoming hotbeds for deals, maybe driven by tech, strong domestic demand, strategic manufacturing. It paints a picture of a really diverse and fast-moving region.
Okay, we've covered the big three regions. Let's quickly touch on South America and the Middle East before we get to the region with the biggest growth rate. What's the picture in SA and ME?
South America shows, consistent growth, about 2.2% CAGR overall. Brazil's the main driver there. The Middle East is a bit stronger, 3.1% CAGR overall. Saudi Arabia and the UAE are the big contributors, as you'd probably expect.
Right. Any surprises there?
Well, we see that same pattern again. While Saudi and UAE drive the volume, the rest of Middle East categories.
Let me guess. Higher growth rate.
You got it, 4.4% CAGR. It reinforces this idea that specific, maybe sector-focused expansion is happening beyond just the headline economies.
That pattern is really consistent across regions.
Right.
Okay, but you hinted at one region outperforming all others in terms of growth rate, the big reveal.
Yes. And this might be the most striking finding in the report, really challenging some common assumptions.
Yeah.
Talking about Africa.
Africa, okay. What are the numbers?
The report highlights what it calls impressive momentum. Africa has the highest regional KGR of them all, a full 5%.
5%. Wow. What does that look like in dollar terms?
Is growing from just under $600 million in 2021 to projected over $1 billion by 2033.
So crossing the billion-dollar mark, that's significant momentum. Are there specific countries driving that 5%?
Absolutely. Nigeria stands out with a 5.6% CAGR. It's expected to nearly double its market size over this period.
Nearly double. Okay.
And South Africa's right there, too, showing really robust growth at 5.8% CAGR.
5.8%, even higher.
Exactly. This isn't just marginal activity. It signifies a real surge in M&A, probably fueled by things like rapid urbanization, growing tech sectors, increased foreign investment, looking at consumer markets, infrastructure. It really points to a fundamental shift.
That is a major finding. Africa leading the pack in growth rate. Okay, so let's pull back. We've toured the globe, seen the numbers. If you connect all these regional dots, what's the overarching story here?
I think the big picture is pretty clear. You have the mature markets, the U.S., Western Europe, providing a stable base, consistent activity. They're still huge.
Right, the foundation.
But the real acceleration, the engine driving that overall global growth figure we started with, it's fundamentally coming from emerging economies. We're seeing it vividly in Africa, parts of Asia Pacific like India and Taiwan, and even those rest of categories in the Middle East and Europe.
And why is that acceleration happening now in those places?
It seems directly linked to things like robust economic reforms happening on the ground, capital markets becoming deeper and more accessible, and just the rapid development of new industries, often tech-related but not exclusively.
So for our listeners, understanding this isn't just about finance geeks, is it?
Not at all. Grasping this shift is, I think, crucial to understanding where global economic power is actually moving, where innovation is bubbling up, and frankly, where future opportunities are likely to emerge. It's a map of economic energy.
Okay, so let's try and sum this up. The global M&A advisory market, it's growing steadily overall. It acts as a kind of barometer for economic health and corporate confidence.
Exactly.
But the really fascinating story is underneath that headline number, it's the regional shifts, especially the powerful growth coming from emerging markets really supercharging the whole thing.
Precisely. And remember, these M&A deals, this advisory market, they aren't just abstract numbers on a page. They're real indicators of economic health, corporate strategy in action. Yeah. They directly influence innovation trends, they shape job markets, they change the competitive landscape that, you navigate every day as a consumer, as an employee, as an investor.
Which brings us to a final thought to leave you with. If this M&A advisory market truly does reflect corporate confidence, strategic direction, well, what do these diverging growth rates, steady in mature markets, accelerating in emerging ones, really tell us? Where is that next wave of global economic power actually taking shape? Something to think about. Welcome to the Deep Dive, your shortcut to being well-informed, fast. Today, we're plunging into, well, a pretty high-stakes world.
That's right, the dynamic world where corporate empires are built, reshaped.
And sometimes completely reimagined. The mergers and acquisitions advisory market, M&A for short.
Exactly.
Our mission today, we want to cut through all the noise, the complexity, and give you a really clear understanding of what's driving this crucial sector.
And what's holding it back too?
Yes, the challenges, and also how it's transforming. We're drawing insights from some comprehensive market research analysis.
Trying to make it all digestible and hopefully engaging for you.
So let's unpack this a bit. What really makes the M&A advisory world tick, and why is it, so important in today's business landscape?
Well, what's fascinating, I think, is just how profoundly this market influences global corporate strategy and investment, too.
It's not just moving money around, then.
Not at all. It acts as this critical, often kind of unseen component behind huge corporate transformations. It fundamentally changes how companies grow and compete.
Okay, that's a key point. So, if we look at why this market's thriving, one of the biggest drivers seems to be this relentless increase in corporate consolidation.
Right. Across pretty much every industry.
Companies aren't just growing organically anymore, are they? They're actively using M&A.
Definitely. They're chasing footprint expansion, trying to crack open new markets.
What gain those strategic advantages, but why now? What's really pushing this trend?
It's a mix of powerful forces, really.
Yeah.
Globalization is one. It's erased a lot of traditional borders.
Okay.
Then there's the sheer speed of digital transformation. It demands scale, specialized capability.
Things that are often faster to just buy than to try and build from scratch.
Precisely. And crucially, you've got growing investment from private equity, PE, and venture capital, VC firms. They're pouring fuel on the fire.
Right.
And all this creates soaring demand for these specialized advisory firms. They bring the expertise in deal structuring, valuation, that crucial post-merger integration planning.
All aimed at getting maximum value out of these really complex deals. And it's not just what companies are doing, but you mentioned complexity. These deals sound incredibly complicated now, especially cross-border ones.
Oh, absolutely. The regulatory side, the cross-border transactions,
Yeah.
it's a huge challenge.
You're dealing with multiple jurisdictions, right? Different tax codes, antitrust rules.
Foreign investment laws. Each country has its own thicket of regulations.
Sounds like a minefield.
It definitely can be. And that's exactly why these advisory firms have become so indispensable.
They're not just lawyers then.
No, they're more like strategic guides.
Mm.
They help clients navigate all that complexity, ensure compliance, minimize the legal risks.
So their ability to interpret and maybe even anticipate changing international laws is key.
It's a massive asset in today's global deal-making world. Honestly, without that expertise, many companies would struggle to operate internationally, let alone grow through acquisitions.
Okay, so we've got this intense consolidation trend, mounting regulatory complexity. What else is fueling this growth in M&A advisory?
A really significant surge in private equity, PE, and venture capital VC activity.
Maybe quickly explain PE and VC for anyone less familiar.
Sure. So, broadly, these are firms investing directly into private companies. PE often buys more established businesses, aims to optimize them, and sell later. VC tends to focus on early-stage, high-growth startups.
Got it. And they rely heavily on M&A advisors.
Heavily. They need help identifying the right targets, doing really thorough due diligence, much deeper than just kicking the tires.
And planning those strategic exits to get the best returns.
Exactly. And with so much capital flowing into disruptive tech, into new industries, the volume of deals, both mid-market and the huge ones, stays pretty robust.
Which keeps the demand for sophisticated advisory services high.
Sustains it, yeah. It shows how much that private capital trusts these advisors to navigate a competitive landscape and maximize value.
Okay, it sounds like a pretty booming market overall. But, every market has its vulnerabilities, doesn't it? What are the brakes on this? The challenges?
Well, one of the biggest restraints is how much it depends on the wider economy. Market stability,
Right. M&A activity must swing quite a bit with things like inflation, interest rates.
dramatically. Or geopolitical events, instability. When market uncertainty spikes or there's an economic slowdown,
If deals get put on ice.
exactly, deal volumes can plummet. And that directly hits the revenues of advisory firms.
Because their business model is tied to those transaction flows, retainers, and success fees.
Very closely tied. So they're quite vulnerable to those external economic shocks. It's sort of baked into the business.
That makes total sense. Big strategic moves often get paused when times are tough. What other hurdles are there in this seemingly lucrative space?
Intense competition. It's a really crowded field.
Who's competing?
You've got the huge global investment banks, the big accounting firms have advisory arms, plus lots of specialized niche boutique firms, all chasing the same deal.
But clients are probably getting savvier.
More sophisticated, definitely more price sensitive, more selective. So firms absolutely have to differentiate themselves.
About.
Deeper industry expertise, maybe broader geographic reach, or just demonstrably superior client service. It's tough in such a crowded market.
So just being good isn't enough. You have to offer something distinctly valuable.
Precisely.
And even when a deal actually closes, the risks aren't over, are they? I mean, the risks of failed transactions or problems after the merger, integration issues, that sounds tricky.
It absolutely is. And it's forcing a big shift in what advisors are expected to do.
How so?
Well, even after the deal's signed, you can have cultural clashes, operational systems that don't align, strategies that just don't mesh.
And the expected synergies just don't materialize.
Exactly. And failure isn't just costly for the companies involved, it can seriously damage the reputation of the advisory firm.
Especially if the client feels like those risks weren't flagged properly beforehand.
Right. So this is pushing the industry to expand its role way beyond just closing the deal. There's much more emphasis now on long-term value creation, on making the integration actually work.
It's redefining what success even looks like in M&A. The job doesn't end at the handshake anymore.
Not if you want to maintain a good reputation now.
That's a huge strategic shift. Okay, looking ahead then, what are the key trends you see really transforming the M&A advisory market? Where's it going?
One of the most visible trends is the rise of sector-specific and boutique advisory firms.
Meaning?
Clients increasingly want advisors who have incredibly deep specific knowledge of their particular industry. Think healthcare, tech, fintech, renewable energy.
They want someone who truly lives and breathes their market, not just a generalist.
Exactly. Someone who understands the nuances, the specific competitive dynamics, the regulatory quirks of that sector.
That sounds like a challenge for the big do-it-all firms.
It can be. And it's led to this boom in boutique M&A firms. They offer very tailored, focused services. You see this a lot in the mid-market especially.
Where that specialized insight can be the difference maker in a deal.
Often, yes. It suggests clients are valuing depth over sheer breadth in many cases now.
Okay, now here's where I think it gets really interesting. Technology. The integration of advanced analytics, AI. How is that changing this high-stakes game?
Oh, it's huge. AI isn't just a buzzword here. It's fundamentally reshaping how deals are sourced, evaluated, the whole process.
In what ways?
Well, AI can accelerate target screening massively. It can automate complex financial modeling, identify potential synergies or risks that human teams might miss.
Wow.
These tools seriously enhance the accuracy and, importantly, the speed of deal evaluations. They streamline due diligence.
Giving buyers and sellers more confidence.
Faster.
More confidence, faster decisions, yeah. It frees up advisors to focus on the higher-level strategic thinking, the negotiation, the integration planning.
That's a game changer for efficiency, no doubt. Probably for the competition among advisors, too, who has the best tech.
That's becoming a factor, absolutely. And finally, what about this growing focus on ESG? Environmental, social, governance factors, and impact-driven M&A. This feels like a massive shift beyond pure financials.
It absolutely is.
Yeah.
ESG considerations are rapidly moving from the sidelines to center stage in many M&A decisions.
No longer just a nice-to-have or a box-ticking exercise.
No, especially not for institutional investors. ESG, environmental, social, governance factors, these are becoming core due diligence items.
So advisors now have to assess these aspects, too.
They're required to, really. Assess the ESG risks, but also the opportunities within a potential deal. They need to help align transactions with broader sustainability goals, with responsible investment principles.
It's about more than just the financial return now. It's about the target company's wider impact, its long-term viability in a world focused on these issues.
Precisely. It's a much broader definition of value.
So wrapping this up, what does this all mean for you, the listener? We've really seen a market that's constantly moving, right? A fascinating mix of steady growth drivers, but also significant challenges, and some really powerful innovation changing the game.
Yeah, if you connect the dots, it's clear the M&A advisory landscape is just continuously evolving. And the firms that are agile, the ones that adapt to these shifts, the tech, the ESG focus, the specialization.
They're the ones who will lead the future of corporate transformation.
I think so, yes. You can really see how critical these advisors are working behind the scenes on the major corporate shifts that shape our economy.
So here's a final thought to leave you with. Given this increasing integration of AI into deal making and this growing emphasis on ESG, how will the very definition of value in a merger or acquisition continue to evolve?
That's the big question, isn't it?
Right. And what does that mean for future corporate growth and also corporate responsibility around the world? Keep an eye on the business news. You'll start seeing these shifts play out probably more often than you think.